distinguished ladies and gentlemen, let me specifically recognize the President of the Society for Corporate Governance in Nigeria, Chief Olushokun Shuke, Mr. Tijani Borodo, Professor Fabian Ajogu, Dr. Chris Ogbechi, and other members of the Capital Market Solicitors Association present today. While recognizing the very distinguished guests present, please permit me to stand on the existing protocol. Let me begin by most sincerely apologizing for my inability to be physically present with you at this very important breakfast meeting. You know, I'm a government boy, and sometimes when our principals invite us, we find it difficult to say no. When I receive the invitation, I look forward to interacting with you on an issue that is very close to my heart, and also to the heart of the SEC. Unfortunately, some very urgent engagements requiring my presence in Abuja necessitated my absence. I'm, however, grateful for the opportunity to send in this brief recorded message, and I'm glad that you have gladly accepted to air my few comments. My special commendation goes to the Society for Corporate Governance in Nigeria for putting together these breakfast meetings as a platform for the exchange of ideas on improving corporate governance and imbibing best practices in Nigeria. With only 10 years of its existence, the SCGN has established itself as a household name of matters related to corporate governance. Through your programs, distinguished ladies and gentlemen, workshops and publications, you contribute a great deal to expanding knowledge in this critical area and promoting compliance with the various codes of corporate governance in Nigeria. I have titled my message, Corporate Governance and Nigerian Capital Market Development. It should be quite obvious by now why I chose this particular theme. First and foremost, the SEC, as you all know, has a dual mandate of both regulating and developing the Nigerian capital market. Therefore, we are always interested in any issue that has bearing on market development. The second reason is, as an apex regulator, we consider ourselves in a unique position as custodian of corporate governance in Nigeria. And why do I say so? The Central Bank of Nigeria has a code of corporate governance for banks operating in the country. The National Pension Commission has another code of corporate governance, particularly for the pension industry. Similarly, the National Insurance Commission, NICOM, and the Nigerian Communications Commissions all have separate codes for the insurance and telecommunication industries, respectively. The only code of corporate governance in Nigeria that cut across all these industries and more is that of SEC, which applies to all listed companies in the country, regardless of the industry of operations, whether they're in the banking industry or insurance or pension. In essence, our code has the widest reach and certainly apply to the greatest number of companies in Nigeria. As we pursue policies aiming to widen listings by broadening the market, we will see an increasing number of Nigerian companies that will be governed at the minimum in line with the said code. A broadening corporate governance culture would certainly reinforce the development of our capital market and by extension the Nigerian economy. It certainly bears nothing that the conceptual link between corporate governance and capital market development is actually very topical, being an issue that is generating increasing attention from researchers around the world. Even within the International Securities Commission, ISO, they are also putting a lot of efforts in ensuring that in all the jurisdictions within the ISO, that they all comply with the corporate governance code. Within the firm, empirical research by the OECD in 2000 found evidence that links capital misallocation with poor corporate governance. So wherever you have a poor misallocation of capital, there's a very likelihood that you see very low corporate governance. Other works, including research by International Monetary Fund, have also found that better governance practices improve capital allocation, which then enhances overall capital market efficiency, which we all strive to have in our jurisdiction. Internationally, capital has been found to flow more into markets with better governance practices. So even investors would prefer to put their money in a jurisdiction that has an excellent code. On the other hand, the capital market induces more transparency, encourages greater disclosure, and rewards companies that adhere to best governance practice. This symbolic relationship underscores the SEC focus on ensuring that the right regulatory regime for corporate governance is in place within the country. In fact, capital markets and corporate governance are so intertwined that the World Bank and the International Finance Corporation, IFC, have dedicated joint service line called Capital Markets and Corporate Governance Service Line. Their aim is to foster capital markets and improve corporate governance in emerging market countries by providing technical assistance and thought leadership. Establishing the link between the capital market development and corporate governance may be a little difficult in a market like ours that has suffered from the dearth of objective data on compliance level. However, this challenge is being addressed head-on by different groups, including the SCGM. On our part, at the Securities and Exchange Commission, we are introducing the SEC Corporate Governance Scorecard, the first of its kind in Nigeria. This scorecard would be launched in November 2015, sometimes within the week of the 9th of November, which will enable better measurement of the level of compliance to the code in our market. Working with resource personnel from the International Finance Corporation, and let me use this opportunity to express our appreciation to the IFC for the excellent work we've had with them for the last 2 years in terms of the capacity and guidance they have provided to us. Our staff extensively drilled the 2011 code to produce this scorecard while adopting a collaborative approach. The main objective of the scorecard is to promote good corporate governance practice in Nigeria by, one, identifying the strengths and weaknesses in corporate governance practices, thereby helping companies to easily access the level and the quality of their own governance while pointing to areas for improvement. The scorecard will facilitate the availability of corporate governance compliance reports to stakeholders via communication channels like websites, print media, and also will raise awareness of good corporate governance practices and guide investors in making an informed investment decision. It will also enable comparison and benchmarking across companies, industries, and countries. Quoted companies and other major stakeholders were actively involved in this development. After the launch of this scorecard, we'll be conducting a comprehensive training program for respondents to be able to appropriately utilize it. In fact, as we speak this morning, the SEC and IFC are today organizing a training session for about 75 compliance officers and company secretaries of public listed companies at Protea Hotel, Victoria Island in Lagos, to help them understand the corporate governance scorecard and alert companies to the new disclosure requirements of SEC. These disclosures will be used annually to assess corporate governance practices in listed companies in our country. We are confident, distinguished ladies and gentlemen, that once the scorecard becomes fully operational, we will not only be able to measure the level of compliance to the code in Nigeria, but we will also begin to see real improvements in the overall level of compliance. The reason is because we are crafting rules to make disclosure mandatory as regards the parts of the code extracted from CAM and the parts strongly recommended for implementation under the scorecard regime. Mandatory or not, meaningful disclosure and a comprehensive reporting mechanism which can be verified by stakeholders as the regulators is required in eliciting and measuring compliance. The SEC will not stop at merely making disclosure mandatory. We will also ensure that the rules are strictly enforced. Disclosure is one of the sides of the equation. In strengthening market discipline, the other side is the considered exercise of shareholders' rights. Shareholders can play an important role in enhancing corporate governance by studying corporate statements, attending general meetings, and voting on key issues. We all know how AGMs are being conducted in this country. And by having this scorecard, we expect that AGMs will be held in a more better manner. Other stakeholders like the media and research analysts have an equally important role of placing the spotlight on companies with exemplary corporate governance practices, as well as call attention to questionable practices as well. The entire capital market community understands the importance of better governance practices for our market to have any meaningful chance of developing beyond our peers. This explains why corporate governance receives great prominence within our 10-year master plan, which we have begun implementing. And we have said over and over again that our focus for the market is to faithfully implement the master plan. And I'm happy to tell you this morning that we are doing quite well, but we know the journey is not yet over. Throughout the document, the need to build strong and well-governed market intermediaries is highly underscored. The SEC believes that corporate governance should not be a concept served for publicly listed companies alone, but should permeate the entire capital market. And that is why we have prioritized the building of strong market institutions that are able to maintain the structures needed to sustain sound corporate governance practices. The recently concluded capitalization exercise is just one of the efforts aimed at building strong, well-capitalized entities in the Nigerian capital market. Entities that will be strong enough to sustain structures that engender corporate governance. And that is why with all the cries, all the contracts that have been made, SEC stood on its ground that the deadline of 30th September is sacrosanct. And we're happy that we've been able to keep to it. And as we move along, we are currently doing verification for all those institutions that have filed their report. And before the end of the year, we'll be able to come up with a final list of those companies that have met the minimum requirement. There is no doubt that better governance practices will lead to lower infractions, which will imply less and less investors' complaints. This will be good for investor confidence and market development, as real investors share the apathy that had kept them out of the market since the 2008 crisis. The SEC will continue to support all efforts aimed at improving compliance to corporate governance code in our country. We believe this is critical to achieving our mandate of developing the capital market. I must therefore thank you most sincerely once again for the good work your society continues to do in actualizing this objective. You remain our partner in this crusade. Thank you very much once again for the kind invitation to participate on this platform. I wish you all very fruitful discussions. And once again, my sincere apology for not being able to be with you. I would have loved to be in the midst of a very distinguished people like Chief Oshuke and others. We have not met personally, but I look forward to one day meeting all of you. Thank you very much once again.